All right, everybody, welcome to the Trader War Room. In this session, the whole theme for these videos, right? You're going to be seeing a lot of these coming from High Performance Trader on Sundays, and the whole theme is to get us prepared for the week ahead. Okay, we have to be going over what's working. We have to be going over these markets right now. There's no more time to waste. Okay, we have to be moving forward and becoming the absolute best versions of ourselves inside the charts, outside the charts, and where that begins is your mind. Okay, whether or not the market doesn't care about our feelings. It doesn't care about if we're making money, if we're losing money, if we're getting chopped around, right? The market is just here to do what it does. So the purpose of these meetings, once again, is for us to fall back and view it on a larger scale. Okay, what's working, what isn't, how are the market conditions, are they choppy, right? It's just a spot for us to get together and really talk about ways to become that much better every single day in the charts. Okay, so I appreciate you guys being with me. I appreciate you guys being here, but don't hesitate to ask questions, to get involved, right? This is something that I wanted to do on YouTube, and I wanted to see who was out there, who is interested in pushing themselves that much further. Okay, and everybody that wants to get even more involved and join a team of absolute savages that are focused on becoming the best versions of themselves, click those links below, get more involved, understand our strategy and how we trade it every single day. So I want to go over the current state of the market. All right. So I've been trading SPY, I've been trading QQQ, and I've also been trading futures a lot. Okay. Which is obviously ES and the NASDAQ. Now, something that I kind of want to discuss in this video, we're not going to jump right into that, but I want to talk about the differences between prop firm trading and options trading. There are many differences, okay? There's a lot of pros, but there's also a lot of cons when going over to prop firms, and the same way with options, right? So that's something I want to discuss because there's a lot of traders out there right now that are involved with these challenges, and I truly believe those challenges are, I don't want to say not useful, because they're definitely very useful, but it's just a different game you're playing. Okay, so I want to bring it back to what exactly our job is as a day trader. All right, so for me to do this, give me a second here, I'm going to pull up the curriculum that we use, right? And this is something, so when you get involved in the High Performance Trader and you enroll in the Trader Bootcamp program, this is something that we go over. Okay, I just kind of want to give you guys a little sneak peek of what it is we do over here at HPT and what our goals are. Okay, number one goal as a day trader, and what I'm focused on going into next week, is identifying healthy and unhealthy opportunities. Okay, see, going back to the market doesn't care 2 iotas about how you feel, how much money you're making or losing. The market just markets. Okay, price action goes up, price action goes down. When this happens, it presents us opportunity. How do we identify that opportunity? All right, so let's dive into that, because there's been some recent shifts. Okay, there's been a couple shifts in how we're actually identifying opportunity. All right, I want to show you guys the Tesla trade we took Friday, and how and what it is I was looking for. All right, so previously to last week, we've had a 3-step approach to identify good opportunity. All right, to do this, we're looking to A, trade off a critical level, B, identify a moving average cross, C, identify an RBI GBI entry. Okay, so that would look something on Tesla like this. All right, so if we were to trade our strategy properly, we would A, identify open print, B, identify a moving average cross, which is right here and right here, and then we're looking for an RBI or a GBI. Right here, this is a red candle that's ignored, so that would initiate a short play. And then right here is a red candle that was ignored, so that would initiate a long play. And this is one of the trades we took on Tesla. But something else has happened that I want to talk about. So we have our 3-step approach that helps us identify opportunities in the market. Now, recently, the market conditions have been crazy, choppy, all over the place. There hasn't been much follow through, at least with SPY. And little bit on the NASDAQ, right? But more SPY's price action in the last month hasn't been that good. As a matter of fact, if you look at our metrics on the HPT cross, it dropped down to around low 70% in the month of August and September, okay? Now, what does this mean? It means that the market is always changing, okay? It's always shifting. We traded one approach for 13 months and we're still trading it. And I really want to dive deep into what exactly that means, right? Like our strategy serves its own purpose, right? Once again, for us to identify healthy opportunity, all right? So going into this week, if I want to identify healthy opportunity, I'm going to be using my strategy, all right? The HPT cross, the 3-step approach, okay? And basically what the strategy does for me is help me know when to get in and when to get out. Because one of the big issues that I had 2-3 weeks ago was not necessarily knowing if I should participate and if I shouldn't, right? Like that's a pretty important question. Do we have the tools, the understanding to know when exactly to play in the market, to participate, and do we know when not to? All right, that's so important. All of us can attest to this. Losing money doesn't always need to happen, okay? Like we need to know when to trade and when not to trade. And how do we do that? With our 3-step approach, okay? We're looking to trade off open print. We're looking to trade that moving average cross. We're looking to trade that RBI, GBI. But now what I've been doing is when I identify a red candle, like right here, that's ignored, I'm drawing a box around it, all right? And a lot of you would probably know about this, but this is something that's very important, guys. When I tell you trading this way has made my life so much easier, I mean it with everything in my heart, okay? When I identify a 5-minute RBI, a red candle that's disrespected, I do not go long right here, okay? I go long right here, okay? Josh, why didn't you go long right here? Because there's no moving average retest, rejection, or respect, okay? This is very important, all right? So the basis of our strategy, okay, our strategy is based off of philosophy where we can't control price, all right? This is very important to understand. We can't make price move. Therefore, we are completely reliant on what the banks are doing at all times. There's never a point in time where we can control or manipulate price. We don't have the capital. I know it sounds silly, like why do you care? It's important. We'll get to that in a minute. But we can't move the price. So our job, just to be clear, is to identify clean opportunity as the banks manipulate it, all right? So what are we actually seeing when we see a red candle that's ignored? All right, let's see. Yeah, I make this a little smaller. So when we see this red candle, let's just do a quick breakdown of what we're actually seeing, because this spot right here is open print. So once again, this is important because we can't move the price. We have to wait for the banks to do something. So how do we know where the banks are at? We watch open print. We watch end of day. We watch PDL. We watch PDH, all right? Because these levels have tons of volume. So you'll see here, there's a lot of selling that came into the market off open print, all right? And it pushed price down to a demand zone down here. I think that was at like end of day. And then buyers started to show back up and they pushed price back up to the open. So when they push price back up into the open, we now get sellers hopping in the same position at the same price as earlier. So now when we get an RBI or a GBI, just to be clear, these right here become trapped sellers, okay? So trapped selling, sellers that are trapped at an important level, what does that mean for us? Hold up. It's important to understand this on a psychological level. When we see trapped sellers, it means two things. A, buyers are they're strong. And B, those sellers are begging to get out of their positions, okay? They're losing money. Buyers are strong enough to completely disregard and disrespect these sellers right here off open print. We know this because this candle happens right here. Now, the old way of trading the strategy, we would be entering long as soon as that happened. Now, and I'm not saying completely toss that out the window. There's certain scenarios where that still works very well, and it's all based off the 20. Okay, so just keep that in mind. If you are entering in long immediately here when you're getting an RBI, cool. Just make sure it's off the 20 EMA, like a candle like this. All right, you see how that candle's respecting that 20? Those are the RBIs and GBIs I want to get into. Okay. Because the moving average principle, once again, when you're extending from a moving average, there's a very high chance that price is going to come back and retest it. All right, so back to the trap sellers. We have selling off open print here. Price came back up to open print. Sellers showed up to the market. They tried to push price down. They couldn't. So now we know, once again, buyers are strong. Buyers are strong, and sellers are dying to get out of that position. We've all been in losing positions, right? It don't feel good. Now, imagine being on an institutional level where these people are hemorrhaging money. And not only that, they can't just exit out of their position as quickly as me and you because they're in such large positions. They can only get out at levels like this where there's enough liquidity. Okay. So what does this look like on a chart for us to be able to spot and actually execute on? RBI. Moving average, turns into an area of value, okay? This box surrounding the RBI, this becomes our primary focus, especially when it's next to a critical level. Now, if you're trading futures and you see some RBIs and GBIs in pre-market, you'll be able to capitalize on them, right? Like anytime you're getting an RBI or a GBI, guys, there's opportunity present. And remember, going back to the curriculum, our main job as a day trader, our number one focus is to identify healthy versus unhealthy opportunity, right? Like every day when I wake up, it's written on my whiteboard, everything. I'm like, listen, my job today is to identify good, healthy opportunity and stay away from garbage. Because I don't care how much money you make. If you don't learn to stay away from garbage, you're just going to lose that money. All right, so bam. We have our area of value. It's off the RBI and it's at open print. So now I need an entry. All right, cool. I don't want to enter right here because now my risk is all out of whack. And all futures traders, I didn't know this until I started trading futures recently. Your risk management skills to pass them fun and challenges need to be so high and tight. Like when I tell you like futures, the main reason why most people blow those accounts is they can't manage the risk appropriately and they're taking way too many trades. It's very easy just to bam, 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 lick them trades off. So once again, going into this week, guys, we need to cut down how many trades we're actually taking. Okay. And this is a great way to do it. Like, yes, you had a day where you took 30 trades and you made good money one day. But you have to ask yourself, is that repeatable? Like, can that behavior be repeated? Can it be scaled? Can that system scale up and work for you? These are questions we got to ask ourselves. All right, so going back to the actual entry criteria, we have red candle, disrespected. We have trap sellers here. Remember, they can only really get out of their positions at this level. So when price comes back into this level, ready? Here's the kick. And can't close outside the 20, you have to trade in that direction. It's non-negotiable. Like, my biggest takeaway, you guys know how I like to simplify things, okay? Moving averages. Josh, how do you trade them? Very simple. If price cannot close outside of the moving average, trade with the moving average, okay? Like, look at the 50 right here. When price came back down to the 50, could we close below it? No. So if you traded with that, you would have been fine, okay? Let's look at the 20. Right here, can price close outside of the 20? No. Well, if you would have went short, you would have made money. How about here? Could price close outside of the 20? No. So if you traded with the 20, you would have been fine. Key takeaway, pro tip. If price cannot close outside of the 20 EMA, trade with the 20. And guys, my risk has been so low. So low. Yeah, I mean, you guys, when I was trading live on the futures account, I was trading 2 SPY contracts, risking less than $200. So my, like, 2 contracts, 4 ticks, like, to keep your risk that tight, this is how I do it. I trade off the 20, off the area of value. This 3-step approach is going to do a couple things for you. It's going to limit the amount of times we're actually getting into positions, which is good, believe it or not. And it's going to increase your win rate. And you are going to be getting filled at pretty much the best spot possible. And you're only going to have to risk a little bit of candle, right? Like on this Tesla trade, I bought, when I went long right here, I went long on this candle, following this candle. When we couldn't close below the 20, I entered long, and I was risking less than $40 a contract. Contracts were $170. I was risking $40 on those contracts. Those contracts I ended up selling them for almost $400. So I'm risking $40, and I'm making $300 per contract, risking $80 to make $600. See, a lot of people don't look at it that way. I've spoken with a lot of traders like, oh, that trade you took, the RR wasn't good. And what they're looking at is they're going, oh yeah, he went in long off the moving average here, and it's only, maybe he's targeting high of day. That's not a good way to do it. I'm like, bro, you're not looking at it the correct way. I'm only risking $80, and I could have potentially made $5,000 on this trade if I held it all the way to previous day high, right? Like I could have, like these positions ended up going through the roof. But once again, use your option contracts as your risk management. That's how because bottom line, that's your money. And I know it's easy to whip out the tool on TradingView and go, oh, that's a 1-to-1. Is it though? Right? Like with options, everything changes, right? Like it's options and futures are completely different. That's something we'll dive into that another time. But you just got to be aware of both. All right. So once again, key takeaways this week. All right. We want to go into the market. We want to do well. Our number one job is identifying healthy and unhealthy opportunity. And once again, the way that we do this is by spotting our 3-step approach. All right. All you guys that are new to the channel, all you have to do is click the link below. I send you a full mini course on our strategy. And this is the thing, right? Like when you get this mini course, it's not like a golden strategy that's just going to make you a multimillionaire. But what it is it's a skill set. All right. It's a tool set that you're going to learn, right? You're going to learn the importance of the critical level, the moving average cross, and the RBI, the GBI, the EMA clouds, the EMAs, right? It's very beneficial. So is our 6-week program. Take advantage of it. We only take 10 traders a month. All right. So now I kind of want to, so far what we've talked about was how to spot good opportunity. Okay. Let's go over just a couple more trades that we had last week, just to really hammer home what it is I'm looking for. And the biggest thing I want to talk about are areas of value, right? Because the areas of value have been my bread and butter. What is an area of value? I understand it's an RBI or a GBI, right? So once you see it in RBI, you draw the box, okay? When price comes back to an RBI, all right, guys, I'm telling you right now, this is gold. This is such a simple, easy way to actually execute in the market. It's crazy. When price comes in, and it works on all time frames, but you just got to understand your expectations got to be correct, right? Like if you're whipping this out on a 1-minute time frame, you have to understand something. You're probably not going to always get the best move because you might be contradicting trend, right? Like the 1 minute's going to trick you. The 2 minutes is going to trick you unless you're an experienced trader that understands larger 5-minute, 1 hour time frame. I highly recommend trade, like as a beginner trader, trade the 5-minute time frame, area of value, retest and rejection. Okay, look at this. Red bar, ignored, retest, rally. Now, Cool. But Josh, I was walking my dog and I missed it. Let's look at this. Next one. So once again, the way it works is we get a red candle or green that's disrespected. Let's talk about this. This is the most important part. You get a red candle that's disrespected. Okay. How do we know it's disrespected? Because the high of this candle was broke by that candle. So anytime we see this right here becomes an area of value. Okay. We draw the box around this level. This box is very valuable to us. That's why I call it area of value. You can call it an opportunity box. I don't care what you call it. You have to watch it though. The reason why this box, this zone is so important is because whoever defends this is going to hold the trend for the next 20, 30, 40 minutes, maybe even the rest of the day. Okay. As price comes into this box and can't close outside of it, this is what we call acceptance. Buyers are dominant right here. They're absorbing these sellers. Okay. Once again, this is trap sellers, right? This red bar ignored. These are unhappy sellers that are losing money. They're going to have to get out of their position. And it's just in like, without even complicating it, all you need to know is like when I see a RBI, I already know buyers got the ball. Prove me wrong. Like you guys seen that meme when the dude's sitting at a table and he goes, and there's like a saying and it says, prove me wrong. Like that's what I think when I see an RBI. I'm like, oh, buyers are here and they're saying, prove me wrong. Like seriously. And now buyers are like, listen, prove me wrong. All right. And then what happens? Sellers defend it. They hold it. We went long on this candle because I closed out above that 9. Is that the perfect entry? No, it's not. It was actually a shitty entry. And let me ask you, like, what makes a bad entry? Right? Because I knew at that point buyers really had the ball. I was going to go long. I was going to put my stop right here. Right? And once again, SPX contract, I think I was risking $150 on this trade. You know, because and it's not necessarily the price action, it's our ability to interpret it. And then let's go into QQQ. Another example here. Key example. This one was beautiful. Once again, what do we got here? RBI. Now, what's the difference? Okay? This is important, okay? What's the difference between this long play and this long play? 20 EMA is the difference, okay? The 20 EMA is literally like, and I'm just really excited about this new principle that we came up with. If you can't close outside of it, trade with it, okay? Don't complicate it. I complicated it. Don't be like that, okay? If you can't close outside that 20 and you're in the AOV, guys, this is definitely where you want to be looking to long the market. All right. Very nice trending day. We went long right here. Okay. I could have went long a little earlier. But I just wanted that little extra RBI right there. Exactly what we got. And beautiful trade. All right. Like once again, not everybody can trade this way. It takes a lot of patience. And I don't want to say that implying that it's hard, because it's not. It just takes a different awareness. Okay. Like when you become aware of how the market actually works, I just made a video about this. Like the market has its own way of maneuvering, and it's literally governed by areas of value, RBIs, GBIs, critical levels, moving averages. And once you become aware of these things and how they actually work, it becomes a lot easier to, for me at least, to be able to execute on these. So, and the list just goes on here. Look at this. Another RBI. Another RBI. Okay. It like once you see it, you can't unsee it. Look at this. Retest. Ready? You thought she was done? RBI, little retest, boom. So once again, just following that RBI and GBI, like a key goal for me this week is to allow the RBI and GBI to tell me what sort of mood the market's in. Let the RBI, the GBI lead to the area of value. Tell me where to get into the position. And once price retests that RBI, that zone, that GBI, and if you cannot close outside that 20, you trade with that 20. That's the key takeaway. And I mean, even a day like this, right? Absolute morning was trash. Now, we took no trade here in the morning, and I'm thankful because the price action was garbage. Now, when we finally did get a clean GBI right here, we actually got a couple of them. Let's talk about this real quick. Price is selling off. Is there anything that you want to do here? Actually, hold on real quick. You guys see this candle? That's a GBI. So this right here is an area of value. Go figure. Isn't that crazy? We had traders on our team take this short right there. Shout out to my boy Chris Beckwith in the mentorship program. Chris has been trading for literally like 4 months. He hopped in short right here. Caught a monstrous trade. Why? Literally just because he identified a green bar that was ignored. And then when the retest showed up, price couldn't close outside the 20. So what did he do? He traded with the 20. Great trade, Chris. But all right, back to the rest of the PA here. Is he gonna let me? Hold on. So price is selling off. We're not really getting anything good. No RBIs, GBIs. We got an RBI here, but it's in a downtrend, so we're not trading against the trend. We finally right here get a green candle that's been exposed, disrespected. Draw the box. Price comes up, retest it. Can't close outside the 20, trade with the 20. Bam. Okay? Josh, I didn't get that one. I know, me neither. So, what do? Drew a box around it. Okay, price came up for the retest, couldn't close outside the 20. You could have entered in right there. All right, this one did close outside the 20. It was kind of sketchy. So, what do? We stayed patient. We got a green candle right here that's disrespected, entered in short. Okay? If you can't close outside that 20, trade with the 20. I never forget. I forgot who it was. But they were like, one of them old videos, like back in 2020 about day trading on YouTube before like it was like cool. Someone was like, if price is going up to an area of resistance and the candle can't close outside of it, trade the reversal. And it's just funny because recently I was like, I need a simple way to know if a moving average is being respected. And I know it sounds silly and stupid, but it made me a lot of money last week. If price cannot close outside the moving average, trade with it. Okay. Now don't go using that on like the 200. I haven't back tested any of it. I'm just talking about the 20 EMA. Okay. But it's a common principle, right? Like it's if a candle can't close outside of something, it's a sign of weakness, right? It's a sign, in this case, that the moving average is strong. And that's our goal at the end of the day. Identify a healthy opportunity. How to identify acceptance using key moving average principles. This is something that we go over deep. All traders that join our team on High Performance Trader. And, it's just basically you starting to use moving averages in a way better light. Like, literally ask yourself, if you aren't doing obviously we could all be doing better in the market, right? Which is why I push myself so hard to figure these things out. But, like, if we're not where we want to be, how could we get there? Better entries, less frequent trades, and better risk. The moving averages and the principles that we teach over here are going to give you all that. Don't be the guy that spends years of his life repeating the same bad patterns in the market, right? Figure out how to rewire your mind in a way where you can identify great opportunity and not be vulnerable, okay? So Now let's just go over. Let's do a little bit of charting, and just go over like current market conditions. And then we'll wrap up this first war room trader room meeting here. So once again, right, my goal every day is to identify good opportunities. So how do I chart? The simplest way known to man. Identify EOD. Give me that level. All right, let me get rid of this guy. Identify previous day high. We'll put that somewhere. Give me a minute. So now identify previous day low. So once again, we have our 4 levels, and we have our bearish target, which would be down here. And we now have our bullish target right there. So now what I like to do is I whip out the daily time frame and I find my level of structure. Okay. So now when I look at this daily time frame, I go, all right, which level do I need to hold for me to stay bullish? Which level does I need to see hold to be bearish? And for me, it's going to be 66108. Okay. I want to trade with whoever can hold this. If we open up above this level, I'm looking for a move into it and out of it. If we fall below this level, I'm looking for a move below and down. Okay. So once again, this will become our critical level. This is 66108, just based off market structure. Let's see what it looks like on the 1 hour. Perfect. Perfect. End of day from Wednesday, right? That right there is how I find my key levels for the week. I'll do it one more time on QQQ. Very simple. Like, don't be the guy that spends all day charting levels that aren't even going to serve you, right? Like, I used to be the guy that had so many lines all over all my chart, and then what would happen when I was in a trade, I knew what none of them even did. I would get wicked freaked out. I'd take profits super early, or I'd get spooked out of the market super fast, and it was all a result of me having way too many targets on my chart. You do not need all those. They are not serving you. They are costing you more than they are helping you. It's hard to see that sometimes and admit that, but it's the truth. All right, so we got previous day high on QQQ, right? This is how we chart. It's very important to do this, guys. That's why we're going over it. EOD, all right? You could also get end of day right up here, 59597. Then I'll go right here and I'll go 59597. What's up, Jen? And then we got previous day open print. What's up, baby?
Since I don't know how to delete the dolls, I need to delete the app and then re-download it.
We could probably figure out how to do that. Go pull up your app.
It's right here.
Okay, pull it up.
There's like this X button, but it doesn't work.
Okay, hold on. Let me see.
So.
All right, so what if you click this one?
No.
Yeah, that's it, baby. That's clear the cell. Just pick a different one.
No, I deleted them, but they're still there, and I don't know how to delete them out of that. Look, there's a pink button.
Trash can. There you go. Remove all the dolls in the background.
Thank you.
Yes. There we go. Hold on, baby.
I didn't even have to delete that.
I gotta finish. You could sit. You gotta be quiet, okay? All right. So once again, I just need to identify all the critical levels, and these levels are going to be the key points for us to trade tomorrow off, right? It's right on the microphone. Here. It's okay, baby. It's okay. It's okay. These are the levels that I want to watch, right? Like, we don't need to have all those lines on our charts. They cost us way too much mental capital. All right. So now, once again, I have all my pit numbers. I go, all right, if the day ends up being bearish, where am I targeting? This guy down here. So I'll go, boom, bear target. All right. If the day ends up being bullish, where am I targeting? This guy right here. Oh, that's a good one too. Right there. Bam. And now, once again, I'm always grabbing my levels off the daily time frame because those levels have the most volume. And we'll target that guy. Boom. So now let's pull up that daily and find that level of, oh, there it is right there. So once again, you guys see how I just got that, right? I literally, let me just call this critical right here. It's critical because what happens there is going to be very important. So what I'm doing is I'm going, all right, whatever happens at this level, right, which is, what is this, Wednesday, Thursday, Friday. This is Wednesday's close, is lining up directly with end of day and previous day high. Go figure. So now in a bearish scenario, sellers are going to take this level and push price down to previous day open print and push price down to previous day low. And then if it gets really bearish, we'll see this guy. Think of how valuable that information is, right? Like come tomorrow, we'll be able to literally capture an $8 move here just because we've identified the correct level. Right? You got to understand the story. That's perfect right there. Look. Wednesday's close, just like on SPY. So key takeaways from this meeting is if price can't close outside the 20, trade with the 20, okay? Trade the area of value, retest the rejection. When I tell you guys, it is very, very effective, right? Just wait for price to come back to that area of value, execute in it, keep your risk high and tight, all right? I appreciate you guys being with us. The war room, this is going to be very important for all traders. We got to make sure we're keeping our heads in the right. We got to stay focused. These markets do not care if you're doing well, if you're making money, or if you're losing money, okay? You need to care. So that's the purpose of these meetings. I love you guys. I appreciate you. Check out those links. Get that free mini course, and I'll see you guys next week.